Meanwhile, we also have some breaking news to bring you from the Bank of Canada this morning. It's holding its key lending rate steady at 2.25%. And the bank's governor, Tiff Macklem, has just been speaking about what factors went into this final rate decision of 2025.
So far, the economy is proving resilient overall. Nevertheless, uncertainty remains high. This includes the unpredictability of U.S. trade policy, and in particular, the upcoming review of the Canada-U.S.-Mexico agreement is creating uncertainty for many businesses. There's also uncertainty about how the Canadian economy will adjust to higher U.S. tariffs. The volatility we're seeing in trade and quarterly GDP make it more difficult to assess the underlying momentum in the economy.
And the CBC's Nisha Patel joins me now to talk a little bit more about what we heard today from Tiff Macklem. And many economists were saying that they were somewhat surprised by the resilience that the economy is showing, given the fact that we've been through so much this year.
Yeah, and Tiff Macklem saying that that is one of the reasons why he is keeping the key interest rate at 2.25%, that the economy has really found its feet considering the shock that happened during the beginning of the year. Inflation has been contained. We've been hovering at around target 2% for the better part of a year, so not so much of a concern as it was a few years ago. So the central bank says that there's no need to lower interest rates for now, that this level of rate will keep inflation low and steady while also allowing the Canadian economy to sort of adjust through this period of structural change. Of course, we are now entering a world where tariffs are kind of a reality going forward. So there is some uncertainty still, but unless there's some kind of economic shock or surprise, the central bank will hold rates at this level for the foreseeable future. Now, two Canadian banks economists coming out with their forecast saying that they expect interest rates to hold at this level with no changes for all of 2026, Arthi. So anyone who is looking to renew their mortgage or get a line of credit, something to keep in mind that unless there is a really big change, we could see rates hold at this level for quite a while.
Okay, good to know. Also, we want to take a look at what things may look like going forward as well. So what does your crystal ball tell you, Nisha?
Oh, I wish I had one because I would be able to tell so many things. But we have had 3 strong job reports in a row, and those really blew past economists' expectations. We are now seeing the unemployment rate in Canada go down to 6.5%. There has been a lot of hiring, which surprised economists. We did narrowly skirt a recession here in Canada. The GDP growth rate for the third quarter was 2.6%. The Bank of Canada saying that even it was surprised by that kind of growth. Now, we do expect the fourth quarter to be a little bit slower in terms of growth, just as the economy continues to adjust through this period of trade uncertainty. But next year looks to be pretty strong as we kind of find our feet adjusting to a new world where tariffs are a reality. There are still sectors that have been quite weak. Those that are exposed to tariffs, steel, autos, aluminum, but we haven't seen those widespread layoffs spill over into other parts of the economy. And so that is really helping us, not feel the worst pain that we could have felt.
Okay, Nisha, thank you for this. That is the CBC's Nisha Patel joining us here in studio.